Today I want to analyze TSMC is the largest semiconductor manufacturer in the world. It manufactures chips for companies like Apple, AMD, and Nvidia. If we take a look at the stock price, we can see we are close to 30% up in 1 year. In the 5-year charts, we are up around 286%. So we're going to take a look at the financials to find out if this company is a good buy right now. The first thing we can recognize is the huge market cap of 939 billion US dollar, is the second largest semiconductor company in the world after Nvidia. We can also see we have a dividend yield of around 1.55%, which we also can see here is increasing in a good rate in the last years. So the next thing we're looking for is the enterprise value to free cash flow ratio under 25. So this can also tell us about the valuation of this company. If it's under 25, it can indicate the undervaluation. So what we're going to do now, we're going to get the enterprise valuation first. So this is the current market cap of 31,012 billion Taiwan dollar. Then we're going to add the debt. So this is around 1,000 billion Taiwan dollar. Then we're going to take minus the cash that we had. So this is 2,422 billion Taiwan dollar. So this is the enterprise valuation. So we can calculate this first. So the number we get is around 29,590 billion Taiwan dollar. Then we're going to divide it with the current free cash flow. This was around 870 billion. So if we calculate this now, then we get the ratio. So the number we get is around 34. So this number indicates the overvaluation right now. So it's not a check here. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and a declining business. So we can see here in 2020, the revenue was around 1,339 Taiwan dollar. This was a 25% increase from 2019. Then we had the 18% increase in 2021, then 42% increase in 2022, then around 4% decline in 2023, and then the strong increase again in 2024 with 33%. So overall, we had a strong growth in the last 5 years. So the check here. So the next thing we're looking for is free cash flow growth in the last 5 years. A very important number because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So we want to see that grow, and we can see in 2020 the free cash flow was around 315 billion Taiwan dollar. This was a 103% increase from 2019. Then we had the 13% decline in 2021. Then we had the 93% growth in 2022. Then again the decline of 44% in 2023, and then the strong increase around 197% in 2024. So overall, we had the free cash flow growth in the last 5 years, so it would be a check here. If we want to find out why we had the free cash flow decline in 2021, we can see here the operating cash flow was actually increasing in 2021 around 35%. What we can also see here, the capital expenditure did increase a lot. We can see from 2020 around 507 billion Taiwan dollar, then to around 839 Taiwan dollar in 2021. So this is a huge increase, and we can see here as well 2022 is increased as well. So I think this company investing in the factories, so that's why the free cash flow declined in some years. The next thing we're looking for is a free cash flow yield over 4%. This can also tell us about the valuation of this company. If it's under 4%, it can indicate the overvaluation. So what we're going to do now, we're going to take the free cash flow in 2024. So this was around 870 billion Taiwan dollar. Then we're going to divide it with the current market cap around 31,012 billion Taiwan dollar. And then we're going to get the free cash flow yield for 2024. So the number we get is around 2.8%. So this can indicate an overvaluation from the current free cash flow yield. So it's not a check here, but we also need to consider that they can grow the free cash flow in the future. So I think we should also make some assumptions about the free cash flow in the future. If we ask ChatGPT, we can see here in 2025 the free cash flow could be around 797 billion Taiwan dollar. In 2026, around 1,311 billion Taiwan dollar. In 2027, around 1,906 billion Taiwan dollar. So overall, I think we could maybe assume in 2027 around 1,800 billion Taiwan dollar. So if we take this number here as a free cash flow, and then we're going to divide it with the current market cap, you could get the free cash flow yield for 2027. So the number we get is around 5.8%. So if we assume that in 2027 the free cash flow could be around 1,800 billion Taiwan dollar, this would be a free cash flow yield of 5.8%. So this is already looking more undervalued right now. So if we can assume that the free cash flow can grow to this level, I think this company can be an interesting buy right now. The next thing we're looking for is a debt to free cash flow ratio under 5. So this means the company can pay back the debt with a free cash flow in under 5 years. Very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So what we're going to do now, we're going to take the long-term debt. So we can see here around 958 billion Taiwan dollar. Then we're going to add the short-term debt as well. We can see here around 59 billion Taiwan dollar. Then we're going to divide it with the current free cash flow of around 870 billion Taiwan dollar. And then we're going to get the debt to free cash flow ratio for 2024. So the number we get is around 1.16. So it means a little bit over 1 year we can pay back the debt with the free cash flow. This is a really good number. It's a check here. We can also take a look on how much money this company has in the bank. We can see here around 2,422 billion Taiwan dollar. This is a big amount again, so they have a lot of money in the bank. This is a good thing. I think they have a very good balance sheet. But now we can also use the assumption that they can increase the free cash flow in the future. So if we say in 2027, the free cash flow could be around 1,800 billion Taiwan dollar. So we can take this number here. So we're going to use the enterprise valuation from right now, and then we're going to divide it with the free cash flow that we could have in the future. So then we're going to get a different number. So the number we get is around 16.4. So this number looks way better. It can indicate an undervaluation if this company can increase the free cash flow in the future, and if we can have a free cash flow around 1,800 billion Taiwan dollar in 2027. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially if we think the company is undervalued. So if we take a look here, we can see in the last 5 years, the company didn't buy back their own shares. Actually, the shares outstanding didn't increase and didn't decrease much. So overall, this company is not doing much about the shares outstanding. So it's not a check here. But I think it's also not a problem, because it also means the company not increasing the shares outstanding. So this is also a good thing, I would say. I would like to give my conclusion about this company. So let's start with a positive. So I think we have a strong business here. The semiconductor companies can become more important in the future. We also have a good revenue growth in the last 5 years. We have a strong free cash flow growth as well. We have a great balance sheet with a low amount of debt and a good amount of cash on hand. But the valuation could be quite high right now. We have the enterprise valuation to free cash flow ratio around 34. So this can indicate an overvaluation. But if we can expect the free cash flow to grow in the future, the valuation could look better right now. If we assume that in 2027, the free cash flow could be around 1,800 billion Taiwan dollar, then the enterprise valuation to free cash flow ratio could be around 16.4, which can then indicate the undervaluation. So if you expect this company to can grow the free cash flow this high in 2027, I think this company can still be a good buy right now. If you found this video helpful, don't forget to like and comment and subscribe for more content.